Hello, guys. It's a pleasure to be here today as we explore one of the most transformative intersection of technology and investment. So, over the past few years, the real estate market has undergone significant fluctuations impacted by rising interest rates, economic downturn, and evolving investor sentiment. However, as we stand here in 2025, there is a renewed optimism, and blockchain is positioned to redefine real estate investment, ownership, and transactions in unprecedented ways. So, in this video, we'll be looking at the market trends, the tokenization benefits, regulatory landscape challenges, and emerging players. So, the real estate market is emerging from a rate-driven downturn. The real estate asset class plays a significant role in many investment portfolios, with investor allocations increasing significantly over the last 20 years. And during the recent financial crisis, most real estates performed better than other investment asset classes. You know, Cyclical fluctuations and structural changes in the real estate market primarily affect investment activity in real estate and affiliated market like prop tech. Rising and volatile interest rate largely drove the most recent downturn in the real estate market. Real estate transaction volumes were muted globally in 2023. As you can see over the slide here, you're going to see in the charts, you're going to see this, which is 30-year fixed rate mortgage here as the greens, and this 15Y fixed rates, which 15-year, you're going to see it over here, and the recessions, it's this bars. So when you look at the charts, it will be easier for you to understand what I'm saying. So as I was saying, the real estate transaction volumes were muted globally in 2023 because institutional investors reallocated to stocks and bonds, and others had difficulty pricing in a volatile rate environment. Overall, transaction volumes were down to about 48% year over year in 2023, according to MSCI. According to the National Council of Real Estate Investment fiduciaries, the average annualized rate of return for real estate properties in the US fell from an average of 9.76% in 2010 to 2022 to minus 7.9% in 2023. The sentiment has changed, and it's actually changed in the second half of 2024. Experts believe that the global real estate market is starting to emerge from the most recent downturn, and interest rate decline trajectory clarifies value expectation, giving buyers more confidence. According to BlackRock, there are clear signs of life for improving investment activity, with institutional investors hopping back into bidding tents and lenders coming back to the market after peaking at 7.79% in October 2023. The average US 30-year fixed mortgage rate has been below 6.5% since mid-August 2024. Meanwhile, the Fed finally cut the federal funds rate in September, and more cuts are in store and expected by the market. The Dallas Fed expects that the NCREIF, as we said, a National Council of Real Estate, returns to reach 8% in 2 years. Structural changes and the global real estate markets are driven by changing demographics, remote work, integration of fintech, increased digital innovation, and tokenization of real estate, among others. So, real estate tokenization presents an immense opportunity. We've been talking about tokenization. Right now, I want to dive deep into this to see. So, earlier in 2024, BlackRock, the world's largest asset manager, announced its vision to tokenize 10 trillion of its assets, including a significant portion of its 39 billion real estate holdings. This marked a paradigm shift, illustrating that the institutional investors are actively embracing blockchain-based asset management. This is good news, right? Tokenization essentially converts real estate assets into blockchain-based token, representing either fractional ownership or full property titles. According to Citibank, the market for tokenized assets is projected to reach about 5 trillion by 2030, with 1.5 trillion of that in real estate. The Boston Consulting Group's projects that asset tokenization could exceed $16 trillion by then. Clearly, we are not discussing a distant future, but a rapidly unfolding reality. So, as you could see through the slide here, you could see that allocations to tokenized assets are expected to increase 2x to 6x through to 2027. As you could see in 2023, you could see the institutional investors, just like we said that they had to move into stocks and bonds, because most of them were scared to trade in such volatile markets. But as you could see in 2024, they started coming back, and in 2025, this is what we are seeing and what we are about to see. Okay, so moving to the key benefits of tokenization. I must have been talking about this, but you looking at it in the real estate perspective. First of all, what you're going to see is that you're going to see the increased liquidity. We've been saying all of these things. To know more about tokenization, you could go through the videos below. You're going to see a lot on tokenization. We're going to talk more on tokenization until we are out of research. All right, so tokenization enables fractional ownership, opening real estate investments to a wider audience. And also, it brings about lower transaction costs by eliminating unnecessary intermediaries. Blockchain-based transactions significantly reduce fees and inefficiency. And also, it enhances transparency and security. Blockchain provides verifiable records, reducing fraud and ensuring trust and property ownership and regulatory compliance. So while tokenization must navigate regulatory frameworks, it offers new model for compliant investment structures, including KYC, know your customers, and anti-money laundering measures, AML. So one of the greatest challenges and enablers of tokenization is regulation. So to date, the United States has not yet adopted a specific regulatory regime for blockchain-based security, and therefore tokenized real-world assets in the United States needs to be structured in a way that complies with the current security law framework. As a result, the most straightforward path for issuers of security tokens to offer these tokens in the United States is only offer to them to accredited investor and to rely on the regulation, under the Security Act, right? This inability to market or sell to all persons in the United States and all the security compliance obligation necessary to comply with this restriction ultimately limit the potential for large-scale adoption and trading for tokenized real-world assets in the United States. However, globally, several jurisdictions are actively shaping blockchain regulations. The European Union MICR regulation came into effect in 2023, establishing clear guidelines for crypto assets, including asset reference token and e-money tokens. Switzerland has long been a leader in digital asset tokenization regulation, providing clarity for security token offerings and blockchain-based real estate investment. And also, Asia leads in tokenization regulation, with Hong Kong, Singapore, Japan, and Thailand implementing frameworks to support tokenization. The Monetary Authority of Singapore has set forth comprehensive guidelines for issuing security tokens, while Japan has implemented clear rules for amendment to the Act on Settlement of Funds and Financial Instruments and Exchange Act. Japan, in particular, has rapidly embraced real estate tokenization, with security token issuances reaching about $700 million in 2023, a nearly six-fold increase year over year. And local governments are supporting tokenization initiative, and major financial institutions are investing heavily in blockchain-based real estate platforms. So let's look at the challenges quickly. So the challenges in real estate tokenization, the first is liquidity issues. So, despite its potential, real estate tokenization faces key challenges. When you talk about liquidity issues, secondary markets for real estate tokens are still emerging with limited trading infrastructure. And also challenges like standardized valuation models are one of the things. Tokenized asset requires clear valuation methodologies to attract mainstream adoption, and large-scale adoption is still hindered by concerns over regulatory compliance, technology maturity, and traditional alternatives. As we navigate the future of real estate, blockchain is no longer a speculative idea. It is a technological revolution that is already on the way.